Now that we have a firm understanding of candlesticks, how to identify them, how to use them, what volume of candles represents, and how to plot swing points in the market, let's break down this 4-hour chart and view each candle and understand the price action that is associated with just the candlesticks. We're not going to delve into market structure or order flow or anything like that. We're going to simply just focus on price action. So what we'll do is we'll start just at this point right here. We have a market swing point, a swing high. As we can see that this high is lower than this high, and this high is definitely lower than this high, which would mark out this as a market swing point. And as we can see, it's a key pivot in the market. As we can see, price just continues to move down after that. So we get a fairly volumed bullish candle here, lots of sensitivity to the downside. And what we can see leading up to that move is, bearish momentum, large volume, a little bit of a battle between supply and demand, and then volume kick in, and then volume begins to slow down. We get buying pressure forming on the chart with this decent sized bullish candle here, but a lot of sensitivity to the downside, a lot of buying pressure entering the market. And we can see that as the market slows down kind of into this spot. Then as we can see, we get some selling sensitivity to this point, and price then creates this large full-bodied bearish candle, and the price moves to the downside. We start to see a little bit of sensitivity in this area, a little bit of a fight between demand and supply, but overall a lot of volume on the bearish sell side of things. And we can see that's continued by this next candle, another full-bodied candle. And then as we can see, as we further move to the downside, the candles begin to shrink with a little bit more wicks on the bottom. And then once that happens, we see a bullish candle that closes above this candle and is basically testing in this area. So what we're going to notice when we're looking at price action, when we're digging into these candles, is that when we see these wicks, these interactions, more than likely when we look to the left of where the price has decided to stop, we're going to be interacting with these areas because there was already pressure or buying it or selling happening at that area. So it's more than likely we're going to see it to the left. And this is just the interaction of price, because all we're doing is we're depicting this chart using candlesticks and using this or these price levels. And each candle is representing 4 hours of time data. So what we can see is, during this point, there was a lot of buying and selling activity happening around this 126.87 mark. And if we just keep going, we can see that a bearish engulfing candle has formed, and we full volume on the bearish side of things. The next candle, we see a little bit of buying and selling pressure here, low volume, or more specifically, a fight between supply and demand, a little bit of indecision, if you will, as to what's happening. Because as we can see, we're kind of stuck between this moment. We can see that price is moving sideways. We're not really moving anywhere. Then the next candle, we get more volume. We react off of those wicks, this imbalance between buying and selling. There's some sensitivity here, and then we push lower. Again, we start to get a little bit of buying sensitivity. The selling pressure starts to try and come into the market. We get a little bit more buying volume, as we can see with this volume candle. We end right back up into this area. Price slows down with a smaller, low volume bearish candle with a fight here with demand or buying pressure trying to keep this market to continue to the upside. Get more volume to the downside, more volume to the downside. But what we can see is as the market is pushing down, we're creating bigger wicks, and we can start to see that more so here. As we start to push further down, when the momentum starts to slow down, we start to get more wicks on the bottom side. And this is basically buying pressure starting to come into the market. And then what we can see next is we get a very big surge of bullish price action, a full-bodied bullish candle showing a lot of volume in that. We break above basically this key level right here, but what we can see if we just track back to where this high is now starting to interact is this next area of buying and selling. And as we can see, we tap into that, we start to get a little bit of sensitivity. The next candle becomes bearish. Decent volume on the tin, but if we just look, we have a lot or a large wick to the downside. We can see what this is interacting with. It's interacting with this buying and selling area and this buying and selling area before price closes back to the upside. So a lot of buying pressure came at this area. And then what we can see is there's a little bit of indecision, that fight between supply and demand, before we start to get more volume back to the upside. Again, clearing above the previous buying and selling point here, the next swing high. So let's just track back. We'll stop here for just a second. So we said that we had a market swing point right here. And if we just keep going down, what we can see is we have a low. The low to the left is higher and the low to the right is higher. So we have a swing point. And if we just keep going, we can see again, we have a high here with a lower high to the left and a lower high to the right, swing point. And then we track down, we can see higher low to the left, higher low to the right, swing point. Then we can see is this one, it's not until we get to this candle, higher low or lower high to the left and lower high to the right, swing point, swing point. Down here again, this low is higher than this low and this low is higher than this low. Therefore, this is a swing low. You can see once the market accelerates to the upside, we have a swing point here. And then as we can see here, all of these, this low is higher than this low. This low is higher. Then we get this one, which is higher or lower than this one rather. And this one's higher. Therefore, swing point. Move to the upside. We can look at the high. If we just look in the top left-hand corner of the price chart, we can see open, high, low, close. So if I just hover over this candle, we can see that the high comes in at 21097. Move to the right. The high on this one is 21085. So although we can't see it with the way our view is, if I just scrunch the chart up, we can see that this high is in fact higher. So we can just bring our price chart back down, swing high, get another swing low here. Then we can see is there's another swing low that forms here. So this low has a higher low to the left and a higher low to the right. And this low has a higher low to the left and a higher low to the right. And then we get to this candle, which we can see doesn't have a wick at all. This one does. So we have a swing point, and this is where we'll stop because this is going ahead of it. But as you can see, and what this is essentially conveying here is that when we have these swing points, we can see that the market has pivoted doing other sort of things. So you can see that price action has changed the direction once we've put in these swing points, because buying pressure has come in, we've come to the upside, selling pressure has come in, we've moved back to the downside. And then what we can see, if we just look at candles and the interactions that we have with each candle when we're kind of relating it back to these swing points, is this is where we start to see interaction between it. We see a lot of interaction between these swing points, a lot of sensitivity. We can see that price is interacting. Of course, we're going to see that at other key areas on the chart where we have wicks, because we're seeing buying and selling pressure coming into the markets. But basically what this is showcasing is just how the market is changing, and the interaction between the supply and the demand, the buying and selling pressure that's coming into the markets is reflecting and moving the market or changing the market dynamic. And this is why candles are moving from one point to another. It's all just to rebalance different levels of price. So if we keep moving forward, what we can see is we start to get a little bit of volume. We tapered off volume here. We had a big level of indecision or a fight between supply and demand, buying and selling. We can see we come back into all of these key areas of swing highs and swing lows. And then we start to see an increase in volume, large increase in volume, large increase in volume. Definitely a lot of buying pressure in these candles. So then what we do is we look to the left and we say, okay, we're seeing a lot of buying pressure in here. There's some selling pressure in here. And we can see that this is what we react off of. And then we start to get some strong selling volume in here. There's no surprise that we react here. If we track back to the left here, what can we see? That we're reacting off of these wicks. We continue moving on. We can see that we still have continued selling volume, but what we see now is that the selling volume is starting to slow down. And if we just look to the left, we can see that we're interacting with all of these points until we get a large area of indecision. Again, buying and selling pressure. What we can see is we're reacting off of this point here. We have this wick, and then price is being contained essentially between these two price levels, until we get a larger injection of selling volume. Again, if we start to look left, where are we starting to interact with? Again, price levels. At the end of the day, the simplest way to understand what we're trying to do on a price chart is gain valuable insight of all of these price levels and where a lot of buying and selling is happening. And from the technical components of market structure, order flow, liquidity, using the fundamental foundation that is candlesticks and technical analysis that we're doing here on the chart, we'll be able to make even better decisions. So if some of this isn't clear on how you can make tangible trading decisions, don't worry, we're going to start adding on a lot more information that's going to provide a lot more clarity to actually make these decisions. But it starts with fundamentally understanding the relationship between all of these candles, what this graphically depicts, and how we're literally just depicting price levels based on the 4-hour chart. And we'll go just a little bit further here. So as we can see, once we start tapping into these swing lows, let's clear out all the annotations here, we start to slow down yet again. A lot more indecision is forming at this point. We move to the left. What are we reacting off of? All of this indecision, all of these points or these wicks, as well as the swing lows here. And then what we can see is we start getting selling pressure, which is holding this wick, and then bullish volume starts to come back into the charts. We get this large wick of selling pressure that's entering the chart, or entering the market rather. And what are we reacting off of? Reacting off of this point here, but there's more buying strength at this point. Price creates more volume. We start to react into this area, which again was reacting off of these points of buying and selling. We start to slow right back down. We still keep the bullish momentum. And what we can see is we create this candle, which has a lot of buying pressure, a lot of selling pressure, and a smaller body. This is again showing indecision. And what we can see if we just track to the left is we've cleared above this swing high. And if we just scrunch the chart up, you can see now we're interacting with all of these price levels again. So from a perspective of looking at buying low and selling high, this is the market pricing itself as high as it possibly can before again trying to push to the downside. And then what we'll do is we'll just grab my highlighter tool and we'll just identify a couple more swing points to add a little bit more flavor to what we're seeing here. So we had our swing high here, and we'll just keep going candle by candle until we see a low. And what we can see is the low to the right is higher and the low to the left is higher. So we have a swing low. And we move to the next candle, we can see this high to the left, this high is lower, and to the left, this high is lower. So we have a swing high. And what we can also see is we have another swing high here. No swing low because this is just continuous lower lows happening in these candles. And again, if we just start to track back, we can see that these points are going to be areas that are reflecting or reacting off of what's happening on the price charts. And more specifically, if I just clean up these lines, if I just draw this point out right here, we can see that a lot of these points are reaching into this point. Why? Because there was a lot of volume happening here, a big transfer of continued sells, people closing out positions, what have you. Just at the end of the day, it doesn't matter the rationale as to what's happening on the markets. It's more so what's just happening at price. A lot of orders are entering this market's buys and sells. And as a result, this is becoming a catalyst of why price is interacting and forming and flipping at these zones and creating sensitivity more specifically. And what we can see, this low to the left is a higher low, to the right, higher low. We have a swing point. We also have a swing high because this high is lower and this high is lower. And what we can see once more, we have a swing low here because this low is higher and this low is definitely higher. And again, we can just see that the points are all intersecting with other swing lows and swing highs because these are sensitive points. And as we can see on each of these points, this is where we start to see large shifts in the market, where we start to see market doing something and there's volume being injected in the market. Maybe not right away, but as a result, the volume does come. As we can see here, volume came in that switched from bullish to bearish. We can see the candle. We have a bullish candle, bearish engulfing. Volume comes in. We start to hit this area, which is a large interaction point. And as a result, volume starts to fade. Indecision starts to come into the market, or the fight between buying and selling. That's really all indecision becomes at the end of the day, is buying and selling have not been able to establish who's stronger than the other. So as a result, the market starts to create these large wicks, small bodies, and price doesn't really move very far. And then we see volume come back in after we get more swing points being established in the market. Bearish volume, we start to interact with previous swing lows. We create a swing low and a swing high. We taper on volume. We get this wick here, which shows that selling pressure is trying to attempt to push this market down further. More buying pressure that's coming in. And if we just track back again, we're all just looking at price levels, irrespective of the candles. The candles just allow us to understand the volume. The wicks allow us to understand what's happening behind the scenes so we can make better decisions. We're never going to get it 100% of the time, but if we can use this understanding, it can allow us to make better decisions. And as we can see, price then puts a lot of bullish volume or bullish momentum into the market, and we continue raising higher. And as we can see, this high to the right is higher, but this high is lower, so we have a swing high. All these lows are just getting higher. What's the low on this? Let me just move my chart. Again, we can use the open, high, low, and close to look at each individual candle. You can see this is 344, and this is 343, so this low is lower, this low is higher, so we don't have a swing low. But as we can see, the market then creates another indecision point and two swing points. And what we can do is we'll scrunch the chart up again. This is the one that we ended off at when we were going candle by candle, but this is where we're tapping into, these levels. And if we look to the left, we got a lot more wicks. And as we can see, we have more swing points that are all happening or taking place at this point. So there's no surprise that this is a key volume area where price is going to interact and the market is going to make different decisions or react based off of that, have buying and selling pressure. And then what happens next is we can see here quite clearly is we have a little bit of volume starting to kick in, but otherwise indecision. We start to get a little bit more sensitivity to the sell side, and then we start to see an increase in volume as the price continues to move back to the downside. And again, we breach underneath these lows, and we start to interact with this point right here. And we create a swing low, we create a swing high, come down, create a swing low yet again. And this just keeps going on and on and on. And this is the fundamental basis of reading an empty price chart, just understanding the candles, understanding the flow. And as we just keep moving over, we can just keep seeing that all of these points create interaction with one another. That was not the tool I wanted. Was this one. But as we can see, we create swing highs. But what are we reacting off of? We're reacting off of the same points that we've been reacting off of previously. Why? Because there's been a lot of buying and selling happening at these price levels. So we have to use these candlesticks to better understand what's happening on the price chart, but knowing that the fundamental reason why any of this is happening is because the market is moving to these dollar figures, and at these different dollar figures transactions are happening. There's perceived value at all of these price levels to buy or to sell for various reasons, not just for speculation purposes, but for transactional order flow, things like that. So I hope that this was a helpful lesson in bridging the gap between candlesticks and what we learned in the theory video. What I strongly recommend and encourage is doing this same exercise on your charts just to get a better understanding of the interaction between each candlestick, what the extreme highs and what the extreme lows of each wick of a candle is going to interact with one another. Get comfortable with mapping the swing points and using that to have a good fundamental understanding of how these swing points are going to be interaction points later, where we'll see sensitivity or that fight between buying and selling happening in the future. Oh, hey, it's Future Brad back again. Completed all of the swing points from what we just went over, and just to convey a point even further, if we scrunch up the chart just that little bit more, you can see it's all the way to the left or the right side of the chart, and what we can see is all of these swing points just begin to align with one another. And yes, in a lot of cases, it doesn't seem like it's that useful. But again, it goes back to the key fundamental understanding that price is just reacting off of price levels. And each price level is interacting with a lot of buying and selling areas that we see on the charts. These are key areas. They created pivots, they created swing points in the market, and there was a reason for it, and it's because of the price levels. If we just draw things back, we can see that we interact with wicks, we interact with swing points, and so on and so forth. So I hope this exercise and lesson has conveyed just how powerful price levels actually are and the fundamental understanding of candlesticks. Of course, now we're going to jump into market structure and how we can use all of these concepts of using and reading and understanding candlesticks, as well as mapping out swing points in actually mapping and marking out market structure to understand the overall direction of the market, and more importantly, add some rules to some of these swing points that we've been marking out, because it's no surprise, or it goes without saying, that when you mark out every single swing structural point that we see in the market, it's a little daunting and it's hard to make sense of. But again, the whole purpose of this lesson was to analyze candlesticks, understand price levels, and just see the interaction between buying and selling from a candle perspective before we start adding any more technical tool such as market structure or order flow or liquidity concepts. It's very important to understand how all of these price levels interact and what the market is actually doing before you start putting more concepts into play. Again, the whole reason why we use candlestick charts is so we can graphically depict the data, the price level data, onto something and convey it with time. As I said, each candle is 4 hours of time, and we can see what happens in 4 hours of price at various price levels. We can see what happens at each level of price and what has happened within those 4 hours, and we can then make decisions and see the data where price is reacting off of levels time and time again from the left to the right, and we can make and use those data points to make decisions based on, because at the core fundamentals of what we're doing as a trading strategy is trying to identify where buying and selling is going to take place and try to position ourselves with the best of our knowledge based on what we see on the charts to be in the move that is going to run and be in our favor. So if we were looking for buying at, this particular level, for example, we can see that this is a fairly sensitive level. There's a lot happening here. And there'd be a lot of reasons to look for buys here if we dissected this chart further and looked on the lower time frame. But more specifically, if we just look at it from, two very fundamental pieces of information. One is that we have a lot of price interaction around this level, or this price level, which would be about the 120, 230s, as we can see on the right hand side as they move up and down. Of course, this is a 4-hour chart, so this is quite a wide range of price. But what we can see is we have a lot of sensitivity in this area. We can see that we have swing structural points that are being formed in this area, and as we can see, the swing structural points are getting higher and interacting with others. And as we start to enter in them, we start to see bullish momentum or bullish volume entering the charts after bearish momentum that wasn't sustained after we start getting into this point on the charts. And we're able to use that sort of understanding to see this run in price and to see that overall there's a lot more momentum or volume on the buying side than there is the sell side. We have small amounts of candles, we get a little bit more bearish or selling pressure coming into the markets, and then we're met with even more bullish or buying pressure in the market. And then what we can see is, again, price levels playing out over and over and over again. So I hope this was useful. I hope, me plotting all of this forward and then just kind of referring back to it was, helpful and will help in your journey in terms of mapping out all of this for yourself and actually seeing the ebbs and the flows, because some of them are a little bit harder to find. More specifically, if you start to look at this, we have swing high, swing high, swing high. We get trade above the swing high, and then we get volume to the downsides. And you'll see these little nuances the more that you get comfortable with this and start linking the swing points with candlesticks, the interaction, and the volume or the lack thereof volume on the market and in the charts.